All right, so today we're going to talk about Pedro Gutierrez. Now, you might know that name. He's the young investor who famously turned a small inheritance into an absolute fortune betting on GameStop. But the real reason we're talking about him now is that this guy, this one-time king of high-risk bets, has a seriously chilling warning for the entire market. And honestly, understanding why he's sounding the alarm could be one of the most important things you hear all year.
Yeah, you heard that right. A 50% drop. I mean, that's a bold call from anyone. But coming from a guy who made his name betting on things going to the moon, it just hits different. It's the kind of thing that makes you sit up and really pay attention, you know? It feels less like a prediction and more like a tremor before the big one hits.
So that's the big question, isn't it? How does the guy who was the poster child for taking massive risks suddenly become the one screaming danger from the rooftops? This isn't just about one market call. It's about a total 180 flip in his entire philosophy. So, we're going to follow his story and figure out what changed and why he's so convinced a storm is coming.
Okay, so to really get why he's so cautious now, we have to go back to the beginning. We have to understand the wins, because before all the warnings, there is this absolutely spectacular winning streak that made him a legend.
I mean, this run was just incredible. First, you've got the GameStop trade in 2020 that everyone knows about. Then, he sees inflation coming from a mile away and shorts U.S. bonds, basically betting interest rates had to go up, and he was right. Then, when everyone was freaking out about Meta, convinced it was dead, he went all in. 3 huge, gutsy bets against the crowd, and every single one paid off. He was a millionaire by the time he was 23. Let's just park on that GameStop win for a second. He took 10 grand, his entire inheritance, and turned it into $700,000. That's a 70x return. It's the kind of thing that makes people famous, but as we're got to see, it also baked in a really dangerous way of thinking.
So his entire strategy, if you can even call it that, was basically this. Just find 5 or 6 more GameStops, bet the farm on each one, and you're good for life. It was all about hunting for these massive home runs. It was simple, it was incredibly risky, and, as he'd soon find out, it was completely and utterly flawed.
And this, right here, is the pivot. This is the turning point of the whole story. You'd think after a run like that, most people would just double down, right? Get even more aggressive. But Pedro? He did the exact opposite. He had this moment of clarity where he realized he wasn't a genius. He was just a gambler who got lucky.
And those are his words, not mine. Not, I was inexperienced or I was lucky. He literally says, I was an idiot. He looked back and realized his success was like 99% pure luck. He knew he could have just as easily picked the wrong stock and lost everything. And that realization sent him looking for a real process, something repeatable, instead of just chasing lottery tickets.
And man, this comparison says it all. It's night and day. He went to work for a professional investment fund, Nartets, and it was like it completely rewired his brain. He stopped focusing on just the outcome, that big flashy win, and started focusing entirely on the process. The all-in gambles were out, and a disciplined, structured approach was in. His new world wasn't about gut feelings anymore. It was about having a system for everything. A way to filter companies, a way to do serious, deep dive research, talking to former employees, experts, you name it, a way to formally write out why you're investing, and, maybe most importantly, a disciplined process for when to buy and when it's time to sell. It was a whole new ballgame.
So, out of this whole transformation, he built a new set of rules for himself, a simple framework that now guides every single one of his decisions. And the funny thing is, it's actually way simpler than his old, chaotic way of doing things.
His whole strategy now boils down to these 3 pillars, and they're just so powerful in their simplicity. It's not enough to find a great company. You need to find the best company in the best industry that's also in the best part of the world, economically speaking. He realized, hey, even an amazing company is going to struggle if its entire industry is falling apart.
A huge part of this is finding what he calls inevitable industries. So what are those? They're not just trendy growth sectors. They're industries where the future just seems, well, inevitable. Think about e-commerce. A decade ago, it was still kind of small. Now it feels huge, but it's still only about 20% of all retail sales. It's pretty much a given that it's going to 30%, 40%, maybe even 50%. That's the kind of long-term, unstoppable trend he wants to be a part of.
And that brings us all the way back to today. He took this new, disciplined, common-sense philosophy and he pointed it squarely at the current market. And what he saw through this new lens, well, it really spooked him.
He really doesn't pull any punches, does he?
He's not just saying it's similar, he's saying it's a carbon copy of the dot-com bubble. He's seeing the exact same hype, the same crazy speculation, and the same complete detachment from reality that we saw right before that massive crash back in 2000.
And look, he's got the receipts to back it up. He's saying the whole market isn't necessarily in a bubble, but that the bubble is concentrated in a few key areas. You look at tech and AI stocks, they're trading at insane valuations, like 30 or 40 times their earnings. But then you look at the rest of the market, healthcare, energy, and things are way more reasonable. It's like two different markets, and one of them is floating way up in the clouds.
He uses this analogy that just perfectly captures the risk right now. He says in normal times, the economy is on the first floor. If it falls, you might break a leg, but you'll recover. But right now, with valuations this high and a fragile foundation, we are on the 10th floor. And a fall from the 10th floor, well, that's a whole different story.
And look, this isn't just a hunch. He's pointing to 4 specific cracks in the foundation. 1, people have burned through their savings, so there's no cushion. 2, the job market is starting to weaken. 3, the banking system is actually in a tough spot because of interest rates. And 4, our national debt is through the roof, which means the government has less firepower to help out in a crisis. Put it all together, and the picture looks pretty shaky.
So, the big question is, with this pretty dark outlook, how does he actually invest? I mean, it's one thing to have a theory, but how does it work in the real world? Let's look at a company he loves that fits his model, and another one he sold, all because of his new process.
Uber is a perfect example of his strategy in action. It's in what he calls an inevitable industry, ride-sharing and delivery. There's still so much room for it to grow, maybe even 10x over the next couple of decades. Plus, it has this powerful competitive advantage, what they call network effects, right? More drivers brings more riders, which brings more drivers. It's a flywheel that's really hard for competitors to stop.
But here's the thing. A real process isn't just about finding winners. To be honest, that's the easy part. The hardest part is having the discipline to know when to sell a winner. And this is where his new mindset was really put to the test, and it led him to unload one of his biggest success stories.
And that winner was Meta. Yep, the same stock he bought at the bottom. So why'd he sell? Well, he was digging through NVIDIA's reports and realized Meta was planning to spend an absolutely mind-boggling amount of money on AI. We're talking over $200 billion in capital expenditures. That's a number so huge, it would basically just vaporize all of their profits for years. And this is the key takeaway. The old Pedro, the gambler, would have held on for dear life, caught up in the hype and the story. But the new Pedro, the process guy, just looked at the numbers. The whole risk-reward picture had changed. His original thesis was broken, so he sold. It was a cold, logical decision, zero emotion involved. That's what having a process gives you.
So, we end up here. We've seen Pedro Gutierrez go from the wild highs of pure speculation to a strategy that's all about simple, repeatable logic. His big warning about the market comes directly from that new, clear-eyed view. And it leaves us with a really interesting question to chew on. In a world that's gone crazy with hype, could it be that the smartest strategy of all is just a disciplined dose of common sense?